zmstrategy.com. This is me, Engage Kamanwe. And also, if you're new to the channel, kindly click on the subscribe button and also click on the notification below this video. So today I'm going to take you guys on Binance margin trading. So this is a Binance account. I've already logged in my account, and I can say this is a margin dashboard. So before I will start explaining to you guys how this dashboard work, how you can be able to take your trade on the margin trading feature, so I'll need to take you guys to the overview side so that I'll be able to explain to you guys how this margin trading work, because it's just like you are trading on forex, whereby you're trading on forex market. Either you are buying, you can see this is my balance on my account here, on my estimate balance, which is about $2,500 on my account, which is on my spot wallet account. So let's go into the margin side. Let me show you guys some explanation. Now you remember that if you are trading either on forex or you are trading on volatility index, you are making use of MT5 or MT5. Now there is something that we call margin level. There's something we call margin level on either on your MT5 or on your MT4. There's something we call margin level. Now the way this Binance margin level work is that, now the reason why I'm having 99.00 low risk is because I have not taken any trade on my margin account. I have not taken any trade on my margin account. That's why I'm having this. Immediately I deposit money into my margin account and I take a trade, this something will no longer be 99.00 low risk. So know this. And if for example you take a trade and the market started going against you and it dropped into the red side, so they will give you what we call a margin call. We all know what it means by a margin call. The margin call simply means that it's either you deposit money into your account for your trade to keep on continue, or the market or all your money will be finally liquidated when it go below the level which is not supposed to go. So all your funds will be liquidated, and definitely all the trade that you take will definitely be closed. So that is way by the margin level. So let's go down, and here you can see Binance have some fixture. Okay, like what I'm saying is that you can see Binance have some fixture here. You can see here on this tab. I'm going to explain the difference between the cost isolated and also the borrow, repair, and transfer. Now you can see here Binance comes with a feature whereby you can be able to borrow money. You can be able to borrow money to take a trade, just like you maybe you deposit $1,000 into your margin account and you are using the Binance borrow fund. Is that you are going to have times 3 of that your fund, which is instead of you making use of $1,000 to take a trade, you are going to be having $3,000 to take that trade, which is the Binance borrow fund. And this is the repay. This is, now you only make use of this borrow fund when you are taking a trade. Do not make use of this borrow at this wallet overview side. Do not make use of this borrow here. It's only when you're about to take a trade, that's when you're going to click on this borrow icon, which I'm going to explain later on the next video when we're about to be taking a trade. So this is repay. This repay is that if you want to repay the borrow fund which you borrowed on Binance, and mind that on each fund you borrow on Binance, you are going to be paying an interest rate every 1 hour. You are going to be paying an interest rate every 1 hour. So it's not advisable to borrow the fund right now. It's only when you are about to take a trade, that is when you are going to be paying that interest rate of every 1 hour. So now you can see here on the market side we have cross and isolated. Now the difference between cross and isolated is that if you are using cross, for example, maybe you use $100 to take a particular trade, and the market started going against you. And on forex, we know what a spike, when a spike on call on forex, or for those people that they are trading on boom and crash on the derived platform, you know that when a spike on call on boom or when a spike on call on crash and you are putting a stop loss, definitely the market will not obey that your stop loss. It will go above your stop loss where the market, when the market ends. That is where that is where is going to be your stop loss. So on Binance, if you are using cross, and you mark your stop loss on a particular point, and that particular currency, maybe the market is going against you and that particular currency pump, maybe for example you take a set trade, or maybe you take a buy trade for example, and the market started going it started going against it towards the sell direction, and a big dump happened at that particular time. A big dump happened at that particular time that led to a big spike, a big sell spike. Definitely the market will not going to obey that your stop loss. Now note, the market will not going to obey that your stop loss. So the system will have to shop both the money you used to take the trade, and also it's going to affect the money you're also having in your account balance. So that just how the cross work. Then if you're using the isolated way on the margin side, is that even though that a big dump happened and the market started going towards your direction, the system will not going to shop the money on your account balance. It was just going to affect the money that you use to take that trade. It's just going to affect the money that you use to take that trade. So that's just the difference between the cross and the isolated on Binance on the margin trading. So we also have future trading, but I will explain that on the next video. Let me just clearly give you guys a clue on the margin trading side. And say this is cross and this is the isolated, which I've explained, and I've also explained the borrow fund. Like I said, that it's not advisable to borrow fund here. It's not advisable to borrow fund here. You only borrow fund if you are about to execute a trade. That is where you also that is where it's advisable to borrow fund. If you want to borrow fund to take that trade, it's just like, let me throw more light on this borrow fund for you guys to really understand. The borrow fund is just like you deposit a $1,000 into your account, and you are sure that this particular trade, this particular market will go to your direction, as you are at least 90 to 100% sure that this market is going to sell or this market is going to buy. Since you are sure that the market is going to sell or this market is going to buy, you can click on the borrow icon. So when you click on the borrow icon on the trading, let me just show you guys what I mean, so that let me show you guys what I mean by you clicking on the borrow icon. Now I'm going to explain all this stuff to you guys, and that will be on the next video, not this video. Now you can see where is it? Here is it. Now you can see the borrow icon here. Now immediately you click on the immediately you mark on this borrow. Immediately mark on this borrow, which is you're about to execute a trade, and you are sure that trade is going to buy or that trade is going to sell, and you are sure, maybe you want to take a buy trade, you are sure that this market is going to buy. You are 90% to 100% sure that this trade is going to buy. So definitely, since you are sure and the money you have in your account is not much compared to how would I put it, but just like you have $1,000 in your account, and since you are sure that this trade is going to buy and you want to make more profit, now you can click on this borrow. You can mark on this borrow. Immediately you are taking the trade with your $1,000. Definitely the market is definitely Binance will going to borrow you additional $2,000, making it a total of $3,000. That means you are going to be making use of $3,000 to take that particular trade. Now immediately the trade executed, on every 1 hour, you are going to be paying as in a fee of that fund that you borrowed. So Binance is going to be charging you every 1 hour. Binance is going to be charging you for that fund that you borrowed to take that particular trade. So you are going to be paying a fee every 1 hour, which which you are going to be seeing here, which you are going to be seeing here on the particular trade that you take. You're going to see the fee, which, and here is the borrow, and the interest rate which you are going to be paying. So the borrow fund that you borrow will be reflected at this corner. Why you are going to be seeing the interest rate which you are going to be paying every 1 hour. Every 1 hour you are going to be seeing the interest rate here. So this is just a little clue on how Binance margin works. So like I say, that Binance margin trading is just like those of you guys that are strictly into forex, or that are strictly into binary options, or that are strictly into volatility index, that do buy and sell, and know that this Binance margin trading come with high risk, just like the way the forex market also have a high risk. So this Binance of margin also have that same high risk level. So before you jump into Binance margin trading, you need to have a proper understanding, and also you must also good in technical analysis. You must also know how to analyze market technically. You must also know how to analyze market technically in order for you to trade well on this Binance margin and future trading. So like I said, once again, if you're new to this channel, can you click on the subscribe button and also click on the notification bell for more updates. I will see you guys in my next video. So bye for now. I'm Emmanuel.